Chapter 3 of the Foundations of Financial Accounting Masterclass. The accounting system is built upon core components. Chronological elements include the journal and the journal entry. Categorical elements are the account, the ledger, and the chart of accounts. The double entry system ensures that every transaction has a dual effect, maintaining the accounting equation. The T account is a visual tool where the left side is debit and the right side is credit, representing receiving and giving respectively. This master rulebook defines how different account types are increased and what their normal balances are. For instance, assets and expenses are increased by debits and have a normal debit balance. The full accounting cycle begins with analyzing business documents, followed by recording transactions in the journal, posting to ledger accounts, preparing a trial balance, and finally, preparing financial statements. We are focusing on Step 2. Transaction analysis follows a clear flow. Determine affected accounts, identify increases or decreases, translate this into debits or credits, record the entry in the journal, post to the ledger, and then verify accuracy with the trial balance. Journalizing a transaction involves strict mechanics. This includes entering the date, debiting an account, crediting an account with an indent, providing a description, and leaving the post-draft column blank until posting. In practice, a capital investment is recorded by debiting cash and crediting capital, increasing both assets and equity. An asset purchase, like land for cash, is an asset exchange, where total assets remain unchanged. Recognizing revenue involves debiting cash and crediting fees earned, increasing assets and equity, revenue. Complex expenses involve multiple expense accounts being debited, while cash is credited, decreasing assets and equity, expenses. Internal adjustments, like recording supplies expense, decrease assets and equity. Owner withdrawals also decrease assets and equity, and are recorded by debiting the drawing account and crediting cash. Posting is the critical step of transferring specific debits and credits from the chronological journal to the respective categorical ledger accounts. This allows determining the current balance of any specific account and fills the post-ref column. For a prepaid insurance transaction, the journal entry debits prepaid insurance and credits cash. The posting process visually shows this migration to the respective T accounts in the ledger. The trial balance verifies the ledger by listing account titles and balances, totaling the debit and credit columns, and proving mathematical equality. If totals do not match, an error occurred during journalizing or posting. Prior to finalization, accounts are tested for proper placement in the trial balance. Accounts with normal debit balances, like assets and expenses, map to the debit column, while those with normal credit balances, like liabilities and revenues, map to the credit column. The final trial balance confirms mathematical equality when the total debits exactly equal the total credits. Here, both columns total Rm 38,700, proving the accounts are in balance before preparing financial statements.